Is this legit?
Yes. I'd say that the way your viewers might want to question this is, when did rallies fail in 09, 02, and 87? And that is, how much of the loss did they recover before it became a double bottom? That level in the S&P today would be 2475 if this was 2009, so you never had more than a 25% retrace. Or if it's 87 and 02, it's a 38% retrace, which is 2600. So the S&P is beyond what would normally be, hey, this is the ceiling and it's an interim bottom, you're going to retest a low. And I think the key number is 2793, because that means you've recovered half of your losses. If we get to 2793, that's typically telling us we're deep into a bull market recovery. And, something that I think we've been writing about is these declines tend to be symmetric. That's something that people think this will take a long time to resolve. The faster you fall, the faster your recovery. Historically, you recover half your losses in half the time you fell. So this means that we could see 2,800 before the end of the month.
I know, but it seems absurd, Tom, frankly, to be
absurd,
using
yes.
the words bull market in the current environment, just because the numbers in New York and maybe elsewhere, too, seem to be improving a bit. There's a long way to go. I feel uncomfortable almost using those words.
Scott, I agree. It makes no sense. But I would say that I'm not going to try to tell the market what to do. I'm going to try to maybe understand what the market's doing. And there's three reasons this could be happening. One is the crisis could be ending faster than expected. Remember, the White House originally thought 2 million mortality. It looks like we're going to undershoot that. The second is the consumer could come back huge, which is why the retailers and the industrials are bouncing. Remember, if you look at low market value per employee stocks, they're the ones that got hit the hardest, but they're the ones that will benefit from labor supply. And the third is that policymakers acted quickly. So if one of those three is true, maybe this is why the market is staging a strong recovery.
But when does the economy have to begin to reopen for your thesis to play out? What upsets it?
Yes, it's a great question. So we've written about how if you look at prior market bottoms, stocks bottom before jobless claims peak. In 02, it was about 6 weeks. In 09, it was roughly 3 weeks. So basically, before jobless claims peak, the stock market will bottom. And GDP typically takes another year to recover to its previous level, but stocks are already deep into a recovery. So I think the first derivative is jobless claims. That number could be peaking within the next month. And if it does, that means the March 23 bottom could be the actual low.